Okay, good afternoon, everybody, and welcome to another presentation of our AMOS partnership. My name is Cecile Carlson, and I'm one of the partners with AMOS. Like I said, AMOS is a collaboration between different agencies to bring education to the community on topics such as financial empowerment, knowing about your taxes, your home value, and we are out here just trying to educate the community and spread awareness. Today, we will be talking about property taxes, exemptions, and payment options. We have Ms. Shea with the Harris County Tax Assessors Collector's Office, and we have Ms. Mabel Menifee with the HCAD. And they will be co-presenting with us. Sorry, my computer is freezing. So hopefully you guys can hear me. Can you guys hear me? Yes?
Yeah.
Okay, perfect. Sorry about that. So I just wanted to take the time to welcome everybody to another session. Like I said, we're out here bringing information to the community. Thank you to all of our partners who collaborate with us for a month of service. And I'm going to go ahead and pass it over to our presenters so that they can introduce themselves. Remember, we are in a live forum. This is a great opportunity to ask questions. We do have experts here, so take advantage of that. Just be mindful that we are in a public platform. So any information that you do share, remember that other people are able to see it. So just be mindful of sharing any personal information. We will also share with you at the end of the presentation a recording of the presentation and also information. You'll have everybody's contact info. Should you want to ask any questions, you will be able to do so. And without further ado, let me go ahead and get started. Let me pass it over to Shay and then to Ms. Mabel. Thank you so much.
Thank you. Hi, good morning or afternoon, everyone. My name is Shay Pinkowski, and I'm from the Office of Annette Ramirez with the Harris County Tax Assessor Collector's Office. I'm super excited to be able to share some knowledge with you today and answer some questions. If anyone seems to have an issue with volume with me, please let me know because I am feeling a bit under the weather, so just a heads up. But I'm going to turn it over to Ms. Mabel to introduce herself. And as was mentioned before, please, if you can, keep your information to yourself, at least as far as personal information goes. This is going to be live streamed, so there are other people who are going to see this, and the less information, personal information you can provide about yourself, the better. If you have something specific you need to ask, feel free to reach out to us. But I'll turn it over to Ms. Mabel, and she'll be able to start a presentation. Thank you.
Hi, good afternoon, everyone. My name is Mabel Menifee, and I'm with the Harris Central Appraisal District. Thank you so much for joining us this afternoon. And we're gonna be providing some basic information about the appraisal process here in Texas, and specifically the HCAD, the Harris Central Appraisal District, and some of our about our operations. And then we're going to talk a little bit about protesting. I know that we've just about wrapped up the protest season for this year. And we're also going to talk about exemptions, a very important subject that we want to make sure that we can never say enough about exemptions and how important they are to have and understand in order to save money on your property taxes. And it is the one single best way to do so. And there are some things involved in getting them and keeping them simple, fairly simple, but we just want to make sure that everyone understands and can make sure that they have them. And then also some information about contacting HCAD. Also with me today, I believe, is Alicia Kellum. She's with our electronic help desk in the Communication Services Division. And she'll be answering questions in the chat. Should you have any, feel free to post those, and we'll get some answers for you. So just to get started, I'll go ahead and just can everyone see my screen?
Yes.
Somebody? Okay, perfect. All right, so just the Texas property tax system and what how the role that appraisal districts play in that, as I mentioned before. And we're going to talk about basically, here's some information that I'm sure everyone already knows, but we like to kind of start out with it so people can kind of understand how that property tax system guidelines and the Texas Property Tax Code kind of flows from the state legislature down through the appraisal districts, as well as some of the taxing jurisdictions. And when I say taxing jurisdictions, for those of you who may have tuned in for the first time, I'm simply referring to those entities that you pay taxes to. That would be like your school district or the city that you live in or the county. So property taxes, of course, support those services in the city: garbage pickup, firemen, policemen, as well as school districts. And one of the reasons property taxes in Texas tend to play an outsized role, more so than maybe in some other states, is because this is a state where Texas has no state income tax. So the funding for those services comes primarily from property taxes. And those laws that regulate the property tax system in Texas originate with the Texas state legislature. The state agency that sort of has oversight for making sure appraisal districts comply with the guidelines from the tax code is the Texas Comptroller's Office. And some of the central responsibilities, of course, are the one that most people know us is that we value all property in Harris County. That's residential, commercial, agricultural property, farming, etc., industrial, and the business personal property as well. We are required by the tax code to do so at 100% market value, or establishing a market value as close to 100% as we possibly can. And then we do that each year based on January the 1st. So basically what that means is that on January the 1st, your property is valued based on its condition on January the 1st. It could be that something happens where there may be a fire or some sort of, or storm or something that damages the property, may reduce its value on January the 10th. However, whatever the property was like on January the 1st is what the valuation is based on. Now, obviously, the following January, if there's some damage that has reduced the value that has not been repaired, then that would be taken into account for the following year. We also, one of the other things that keeps folks at HCAD the busiest is administering exemptions. And exemptions are something that provide a discount on property taxes to eligible homeowners. We also, something we just did last week, is that we certify the appraisal rolls for all of the taxing jurisdictions. And that basically means that we've provided the values and that we've settled a substantial amount of any protest. And that allows the taxing jurisdictions to then sort of set their rates based on what their budgets are. And so it's important to keep in mind that HCAD does not levy taxes. We merely administer exemptions and set the values. And it is the taxing jurisdictions who will, based on their budgets and the money that they need for operations each year, will set the tax rates, which are then mailed out by the tax office where Shay works, and you'll be hearing from her shortly. Again, appraisals are required to reflect the market value of the property, and that's based on sales, and that's usually recent sales of nearby very like or similar properties and what those are selling for. We do that by a process called mass appraisal, and again, the value is based on sales, typically nearby or similar properties. Again, HCAD has, in Harris County, we have 1.9 million properties or parcels that we value. And again, we also serve over 500 taxing jurisdictions. Depending on where you live, you probably only pay to about 4 or 5 of those, but there are 500 ones scattered across the county in different areas. The local appraisal districts like HCAD, we do have local district governance. We're governed by a 9-member board, and their primary duties are selecting our chief appraiser. Most of what you get from HCAD is usually carries the chief appraiser signature. Chief appraiser means he's basically our CEO. of the district. The other duties that our local board of directors does is they approve our budget, and they also select the appraisal review board members. 3 of those directors are elected by the public. You elect them, and 6 are elected by the taxing jurisdictions. A little bit about our structure, and then one of the things that's very important to remember in terms of why there's certain deadlines that we need you to meet in terms of, I talked earlier about certification and having to do that annually. So we have an annual calendar. As I mentioned, the date of appraisal is on January the 1st. May 15th is usually the protest deadline. You've gotten your evaluation notice from us, usually in late March or early April, and you have until May 15th. If you disagree with the value that HCAT is assigned to the property, you can file a protest or an appeal. And it's always important to remember, because your property may have been your valuation notice may have been sent out later. You always have 30 days from the date of that notice to file a protest, and that's whichever comes later. And then, of course, once HCAT's piece of that property tax process finishes, the October-November tax bills are mailed from the tax assessor collector. And then February 1st is the last day to pay those before they become delinquent, and penalties and late fees may accrue. So the annual value notice, as I mentioned before, that's just kind of what you may recognize here in the top right corner, what it looks like. And you get 2 values on that. One's the appraised value, and the other is the market value. The market value is what HCAT determines each year. That's the value that the property would sell for to a willing buyer on the open market in an open market transaction. We established that annual market value based on sales, and also that is the value that you would be protesting or appealing should you file a protest with HCAT. The appraised value, however, is the one that your taxes are going to be calculated on. It could be the same as market value, particularly if it's an investment or rental property, but usually it's going to be lower because of, number one, there is a 10% appraisal cap increase. So in times when values may be rising rapidly, something that we've seen a lot of in recent years, you're protected from some huge increase in value by it being capped at 10% if you have that homestead exemption. So I mentioned quickly, we talked a little bit about protesting. We just wanted to kind of mention some of that, if you know, to kind of remember, and you may be interested in coming back for one of our protest workshops that we do each spring. But your market value, do you think is consistent with recent property sales in your area? And then, of course, there's something called equity. Those are the 2 main things that people tend to file a protest on. So in terms of equity, it's kind of important for property owners to remember, maybe you have issues such as deferred maintenance, or you have some hidden defects that may affect your home's value. Those are the kind of things that perhaps your property may not sell for what a similar property a few doors down would, because they don't have those kinds of maintenance issues. Those are the kinds of things, because we don't go into your home, that you would want to bring to HCAT's attention. And you can collect your evidence for those kinds of protests, for the protests, such as, you know, maybe get comparable sales information from your local real estate agent. You may have hidden defects, as I have mentioned, and the best thing to kind of prove what those are is to provide those repair estimates. Also take photos if you're going to come in for your hearing or not, or you're going to do it virtually. Those are some things you want to consider. And again, I'm not going to go into too much detail on protesting, because we do have some specific workshops that are dedicated to that, where we actually bring in some of our employees who are the appraisers that do the work, who are the valuation analysts. And those usually happen between March and May. So please do keep that in mind. And we do have those here on AMOS, and we also have some in person throughout the county. Exemptions. This is something that we really hope people will take a look at and concentrate on for making sure they have those and what they are. They say, how can they save you money? How do you get them? An exemption removes part of the value of your property from taxation. It also lowers your taxes. And it's administered by HCAD. And as I mentioned before, it is for the primary residence only. You cannot have more than one home exempted. And again, it's used by the appraised value is what's used by taxing authorities to calculate your bill. Let's talk about what are some of the most common ones. I am hoping that everyone out there listening who is a homeowner is going, yeah, I know all about that. So, but this is one of the reasons we try to do these on a regular basis, because there are so many people who find this process confusing, or simply, they've moved to Texas, or just moved to Texas, or they're new homeowners, and they don't know about the resident homestead exemption. So let's take a look at the different kinds of exemptions. There's the general resident homestead exemption. There's one for seniors who are over 65. That is in addition to, if they already have the general resident homestead exemption, they get the over 65 the year that they turn 65. Something called an over 55 surviving spouse. There is a disability exemption for people who are disabled and unable to work. And there's also several exemptions that are available for veterans, as well as other service related exemptions for first responders. And the general resident homestead exemption, the main item is that you must own and occupy the home as your primary residence. What kind of documentation do we require? Which we do, is just proof of ownership. The home has to be in your name. And if there are two people on the deed, don't forget to make sure that you provide the ownership deed as well as the driver's license for both. We do require that you submit a copy of your driver's license, and the address on the driver's license needs to match that of the property for which you're applying for the exemption. Again, if there are two owners, make sure you send in the driver's license for both. Again, it provides you that, as I mentioned earlier, it provides you with that 10% appraisal increase cap. Right now, you are eligible for a $100,000 school tax exemption by state law, and that means that each and every school district in Texas has to give you that $100,000 off of your value for your school taxes. Shay's going to talk a little bit later about the fact that there will be a referendum on the ballot in November, which you can vote on to increase that tax exemption. So there's the opportunity to get this year's taxes for 2025 to get an additional amount in a property tax discount, which is what we like to call exemptions. Other exemptions might also be offered by various jurisdictions. They have the option to provide additional exemptions. Houston, City of Houston, Harris County, some of your special districts offer additional exemptions, including HISD. The over 65 and disability exemption. These provide relatively the same benefits. You can have one or the other, but you cannot have both. The over 65 is what you would qualify for the entire year that you turn 65. So if your birthday is in late 2025, you're turning 65, you still get those exemptions for this entire tax year. The disability exemption, as I mentioned before, provides the same kinds of benefits that you would get with the over 65, and this is for someone who's unable to work, and they can qualify for that the year that they become eligible to receive Social Security. disability insurance, and or some folks that may not be on Social Security that can still qualify for it by submitting a form that we have on our website along with a physician statement. So there's two ways to be able to get that. So what are some of the additional benefits for that? You get that school tax ceiling, the year or freeze or limitation in several terms, but basically it freezes the amount that you pay in school taxes based on what you paid that year. And it can never change unless it could always go down were your property value to fall. The ceiling could be reduced, or it can go up should you increase the square footage or build a swimming pool or add additional value to your home, then that ceiling would be readjusted to reflect that new value before it's set in place again. You're also eligible, of course, you continue to receive all of the benefits that you already have, you get with the general resident homestead exemption, and you become eligible to pay taxes in installments with no penalties during certain parts of the year, and you can get a tax deferral. Shay's going to talk a little bit more about a tax deferral. It's an option to postpone payment of taxes, and so it's more or less like an insurance policy, particularly for the elderly. Then, of course, there are other exemptions that certain individual jurisdictions may grant as part of the over 65 disability exemptions. It's always a good idea to kind of check what your particular taxing jurisdictions offer. And I say that especially for folks out there that are currently looking for maybe a home to purchase. Sometimes finding an area where those taxing jurisdictions offer, say, a generous exemptions may be the difference in qualifying for a loan. You never know. And let's see, the over 55 surviving spouse exemption simply means that if one of the spouses, you are already receiving the over 65 exemption based on the one of the spouses turning 65, that spouse passes away, as long as the surviving spouse is at least 55 years of age, because of course there is going to be a deed change. The surviving spouse is 55 years of age or older, then they will definitely maintain all of those benefits. And it's important, and that's an important fact, because those folks don't want to start over, because the exemptions would then be based on a new cap year, new eligibility. Would kind of change based on where the value is then. So the surviving spouse definitely wants to keep that exemption in place. And again, as you can see, that you receive all of those benefits, and you continue to be eligible for a tax deferral and the opportunity to pay your bill in installments. I wanted to just kind of bring your attention to I mentioned earlier that veterans benefits is one of them, and there are a number of those. That there's something called the total VA exemption. There's a total disabled veterans surviving spouse exemption. Then there are disability transfers. Then there's the veteran survivors exemption. I mention all of these because if you are a veteran or you feel like you qualify for one of these as a surviving spouse, feel free to contact HCAT and we have a special veterans helpline, and someone can kind of walk you through what you may or may not be eligible for. So if you're a veteran, we highly recommend that you do this if you're not receiving your benefits already. Now, this is something for you folks. I've talked earlier about some of the folks that may be in the process of looking at a home, or maybe you just recently purchased yours. There is something called the immediate resident homestay exemption. It's fairly new. You don't have to wait until the following January 1st anymore to get your exemptions, that you can receive them immediately, and they will be prorated based on when you moved into the home. And that's something that's typically limited to new homes or where the previous owner had no exemptions. In order to qualify for that, you need to make sure you apply for it before the first anniversary of the date you acquired the property. Don't let a year pass without qualifying for that to get that prorated exemption. You would lose it. And then another thing to remember is that if the previous owner did not have exemptions, that's when you are eligible for that. You're going to get that prorated the first year, and then the second full year after your cap eligibility base year has been established, then you continue on with those. One thing that's important to remember is if your home was previously owned and receiving exemptions by the previous owner, those are going to remain on the property for the remainder of the applicable tax year. So you're either going to get the general resident homestead exemption for that previous owner would have gotten for that year, or you're going to get the over 65. And believe me when I tell you, some for the folks that if you're in your 30s or younger than 65 and you move into a home that had been that a over 65 couple had had for a number of years, you're going to benefit from those exemptions that first year. Then you'll see the exemptions you become eligible for kick in the following year. But for that first year, you save quite a bit. Now let's talk about the airship exemption, because this is one that a lot of folks don't really know that they're supposed to pay attention to, or that it's out there and available. So we start by asking the question, is your home still in a deceased relative's name? Maybe you moved into some family property. Whose name is that property still in? Are you living in a property where where you have several heirs to it? Your parents passed away and they left the property to all of the kids. So you don't really own, you own a percentage of it. You don't own it full out. Again, those are typically those homes that are passed down through generations, in some cases without a clear or updated title. This can happen when the grandparent dies without a will, or as I mentioned earlier, leaves multiple heirs to share that ownership. So if you have been living in that property for that, if you're living in a property that this situation describes, then you would want to check out on the general resident homestead exemption application, section 3, that says on the homestead application, it asks that question, if the property is for which you're submitting the application an heir property, and do other heirs own the property? If in fact you check yes on those, then you're gonna there are a few extra steps that you're gonna have to take in order to receive that exemption. And that basically includes providing an affidavit establishing your ownership of interest in the property. We'll need a death certificate for the prior owner of the property, and then a citation for any court records is helpful that relates to your ownership interest in the property. So what this does is, in a lot of cases, you're living in the property, or maybe you've got two siblings living in the property. It gives you the opportunity, and it gives them the opportunity to say, I don't mind my sibling is living there, give her the full 100% deduction, because previously, if you were living in an heir property and say you had three other heirs, well, the 4 of you could only be entitled to 20% of the exemption. But by going through this process to get that heirship exemption, you are entitled to receive that the exemption 100%. And the good part about that is that it does not affect the ownership rights of any of the other heirs. It simply gives you, the person living in the property, the opportunity to save money on paying the property taxes, which obviously, if you're living there, you probably are doing. If you have any questions about this, additional questions, let me strongly suggest that you contact HCAT and ask to speak with one of our exemption specialists, and they'll be more than happy to walk you through the process if you need additional information. But again, that is a section you begin to fill out on section 3 of our general resident homestead application, which is available on our website. How do you apply for them? How do you apply for these exemptions? Well, there's a paper form that you can use. You can mail online. There's a mobile app that you can download either through Google or Apple Store, or you can fill it out online and email it to us. We do ask, you really want to make sure, remember I mentioned about making sure that the deed was properly executed, as well as making sure that whoever's on the deed, you send in a copy of their driver's license as well as yours. We do need a copy of the driver's license for both people whoever's on the deed. So, and again, it needs to match that of your of the address where you are, the address of the property. So you don't want us to have to send out additional information asking for that. Then there's a delay of whatever. And typically we try to get this done in around 60 to 90 days. So you don't want that kind of delay. And then for anyone that may be just a little bit not really sure about filling out those forms, there is a video on our website that you can actually listen to as you fill out the form that will follow along, and it will be very helpful in making sure you put down the correct information. By the way, we also have other videos on our HCAT website that explain different processes, which you may be interested in checking out at www.hcat.org. Also want folks to remember, especially those of you who may be purchasing property for the first time, a lot of times you may get things in the mail that say they can get you a designation of homestead or certain language that may be couched in, where essentially they are charging you a fee to fill out that homestead exemption form and get it for you. Please remember, it's absolutely free. You just simply need to download that information or somehow send that application into HCAT. There is no charge for that unless you go through one of these third-party vendors that it's promoting it as such. So again, I mentioned this airship application, going the wrong way. And then another thing that a lot of people have been asking questions about this year, because the legislature passed a law in the last session about appraisal districts in Texas needing to verify every 5 years whether homestead exemptions, whether homeowners were still eligible for those homestead exemptions. Well, HCAT has for some time now been sending out a card. You may remember getting a little postcard in the mail. It's a white postcard written back and front, and I'm showing you what it says here on the screen on the side that says the property owner. It'll have your name, and it has information that verifies the exemptions that you currently have on your property. So if you get this in the mail, check it out, make sure that you still have the exemptions you're entitled to. And then you can just throw it in a drawer. You verified that. You can always go out on our website and check, but this also verifies those. If you don't remember getting this in the mail, then you may just want to give HCAT a call just to make sure your exemptions are still in place. Or again, check it out online, because what happens is these cards are not can't be forwarded. So if it's not delivered to you in your mailbox, then it's going to come back to HCAD, and that's going to start a process for us to actually verify. So that is our system. That is HCAD system and has been HCAD system for verifying exemption eligibility. So when you hear someone say, oh, I have to, they may live in another county in Texas that may be doing it a different way, where they actually do have to reapply for their exemptions every 5 years. HCAD, we know we've got your exemptions on file, and you only need to contact us when they have changed. When something has changed, usually that's has to do with property ownership. And this is information about how to contact HCAD. We're out here on the Northwest Freeway near the Hollister Tidwell exit. Our website, where we've got lots of helpful information, as I've said, it's www.hcad.org. And then, of course, there's several ways to contact us online. There's the form that you can fill out, which gives us additional information, so we can probably make sure that your request gets routed to the correct department. And then there's help@hcad.org, where you can currently shoot us an email and telling us what you need or want. I do want to mention that, again, just to remind you that we conduct these educational workshops online with our community partners like AMOS regularly. And if you want to come back to any of the others, just go to Neighborhood Recovery CDC's website, where you can register and be sent the link. And again, I want to remind you that the public workshops that focus on how to protest your property value are held each spring, and we do those online here in AMOS, and we also go out into various areas of the county and the community, maybe at a multi-service center. In some cases, we will have other public organizations that will host those for our valuation analyst. And the tax office also comes out with us, again, so you can see both sides of that property tax process, because excuse me, HCAD does the valuations and administers the exemptions. And then once we get into calculating tax rates and sending out bills, that's part of the tax assessor collector's job. So I want to thank you very much for your attention to the presentation. Hopefully I've provided many of you with some answers, or reacquainted others with information. And I'm now going to turn it over to my colleague over at the tax office. Take it away, Shay. Thank you.
Hi. Thank you, Mabel. We appreciate your assistance today. So as if you missed the beginning, my name is Shay Pinkowski, and I'm with the Office of Annette Ramirez, which is our Harris County Tax Assessor Collector's Office. I am going to go ahead and put up my screen now so that you can see our presentation. But today I'm going to go over a bit of property taxes, how they're calculated, what your bill would look like, along with some options of payment that you may not be aware of. So we're going to go over a couple of those. And again, if you have any questions, feel free to put them in the chat. I'll address them towards the end of the presentation. So for property taxes, we have just recently elected our newest tax assessor collector, Ms. Annette Ramirez. She served as a legal counsel for Alden Independent School District for a while, about 23 years. And she's recently just turned over at the beginning of this January into our office. We're super excited about all the new information and new workshops and things that we're trying to do to make our office a better place to come and pay your taxes to. So lots to look forward to, lots of new information for everyone. But I'm going to go ahead and proceed on. So what does the Harris County Tax Office do? Our office functions for quite a few things. Most, what I know, is for property taxes. We collect your property taxes and send out those bills at the end of each year. But in addition to that, we also register your vehicles. We process documentation for title transfers for vehicles, in addition to managing voter rolls and registering voters. So there's quite a few things that go on in our office, but what I'm going to speak about is property taxes, although I was requested by our auto departments to mention that this new change for our vehicle registration renewals, you're no longer required to provide us with a copy of your vehicle inspection for safety. All we need now is an emissions test. So you still need to go get an emissions test done, but you're no longer required to do a safety inspection. So just keep that in mind whenever you're trying to renew your registration this year. So as an overview, Harris County maintains approximately 1.7 million tax accounts and collects over $8 billion in property taxes every year. And that just, depends on the values of the properties in Harris County, but those are the numbers that we have from last year. And all of those funds that we collect are all dispersed into different jurisdictions, and depending on where you live will depend on which jurisdictions are applicable to your property. But we collect for Harris County, Houston ISD, City of Houston, the Harris County Flood Control District, along with quite a few other things such as Emergency Services District, some other schools, in addition to a couple of MUDs, which are your municipal utilities districts. So you'll see a list of those jurisdictions on your bill whenever you get it towards the end of the year. And just keep in mind that those jurisdictions that show on that statement might not be the only ones applicable to you. And it's best to do a search of your property to ensure that you're maintaining and upkeeping with all of the bills that are applicable to your property. So some recent property tax changes. In the past 4 years, we've seen a lot of exemptions get increased for homesteads and homesteads of over 65 and disabled persons, as well as just a general homestead for the school. So within the last 4 years, the property's exemptions for Harris County increased from $229,000 to $320,000. And when we say that the exemptions have increased, this is the value, as Ms. Mabel explained earlier, that gets that your property appraised value gets reduced by, and that reduced value is what you pay taxes on. That becomes your taxable value. So when these exemptions go up and increase, then you tend to pay a bit less because of those exemptions being increased. City of Houston also had an increase for homestead and over 65 persons. That went from $160,000 4 years ago to $260,000 just last year. The general homestead school, for your school specifically, increased 4 years ago from $25,000 to $100,000 for just general homestead. And in addition to all those increases, we also began to allow for the property to be eligible for exemptions to be prorated, meaning as opposed to waiting for the first full year in which you own a property, you would be able to apply for those exemptions and have them applied to your property as of the date in which you gained ownership of that property. So if I were to move into the property in February, my exemptions would apply from that day in February until the end of the year, as opposed to having to wait till the following January to apply for my homestead exemption. So it's a pretty great method of reducing those taxes for your property. I mentioned earlier that whenever you're looking at your property taxes, that you would be able to see the list of jurisdictions that are applicable to your property. If you look on the left-hand side, I know it's a bit small, but that left-hand side shows you an image of what our bill tends to look like. That section there in the very center of the page is the list of jurisdictions, and it'll list the value of the property, any exemptions being applied, what the taxable value is, and then the jurisdiction's tax value, or the taxing unit's tax rate for that year. So it'll show you the exact numbers that we use for our calculations whenever we're going through the process of calculating your tax bill. At the bottom, you'll see a coupon, which is what you would normally use whenever you're mailing in a statement to our office. And that statement down at the bottom is where you would add what your taxes amount that you're paying are, along with the mailing address for where you're going to be sending that payment to. And this is how you would ensure that the taxes that you're paying are the correct taxes, because whatever information is on that coupon should match what's on your bill, and then that way we're able to maintain the records all together whenever you're making your payments. In addition to getting your statements in the mail, we do have an option for you to receive your tax statements electronically, and these electronic tax statements are usually sent to you by email. You have to sign up for it on our website, but once you do, your tax statement will be emailed to you. Now, this tax statement sent to you in an email does take the place of the tax statement that is sent to you physically. So if you sign up for getting your tax statements emailed to you, you will not receive your statement in the mail as you normally would have previously. So just keep that in mind if you decide that you'd like to do so. And if your email changes, if you get locked out, please make sure that you go in to either change that email to get it to the correct place or to cancel it all out together to ensure that you get your bills as a physical statement in the mail, or that you check on our website so that you're able to ensure that the tax bill has come out, and whenever your bill is available that you're able to pay that. I mentioned this briefly a minute ago, but the way that we collect taxes and calculate your taxes is based off of the taxable value of your property, which is then multiplied by the tax rate. Each jurisdiction that is applicable to your property will have their own independent tax rate. None of them are always going to match. So we use that tax rate by the taxable value of your property, and that's how we determine how much in dollars you're being taxed on for your tax bill. So whenever you see your tax statement, you should be able to see what the total taxable value is of your property, and then what the tax rate is for each one of those jurisdictions. And that is how we come up with the sums in which your bill is equal to. So I mentioned this a little bit earlier in reference to our homestead exemptions and how they've been increasing the past couple of years. But just as for the visual folks who prefer to have a visual of what that looks like, a tax bill for a property of $342,000 without any exemptions would equal to a bill of just a bit over $7,000. Now, when you have a homestead on that property, those exemptions go and reduce the taxable value of your property, which in turn determines that you owe less in property taxes. That tax bill for a homesteaded property would be something closer to the realm of $5,000 instead of $7,000. And then furthermore, if you have the homestead and an over 65 or a homestead and a disabled person's exemption, those taxes are getting reduced drastically. So with the homestead and the over 65 exemption, the tax bill would be closer to $1.5 thousand instead of closer to $5,000, or even worse, without any exemptions, $7,000. So it is something to keep in mind. Every jurisdiction has exemptions that are applicable to them, so they're not all going to be equal. Not all exemptions are going to be applied across the board to the same amount. So just keep that in mind when you're looking at your statement, that you may see a bigger difference from your appraised value and your taxable value on, say, your school than you would for an emergency services district or a MUD. So just keep that in mind. This is more preemptive. At this moment, we haven't, thank God, gone through any kind of major disaster recently. But homeowners and property owners can take advantage of something called an Assistance for Damaged Property in Disaster Areas exemption. And this exemption would need to be requested through the Harris Central Appraisal District, but it's for properties who sustain more than 15% of their property's value in damages. There's an application form that you would fill out through the Harris Central Appraisal District's website, and you would have to apply for it through them. But whenever you do apply for them, we do recommend that you include any kind of documentation, estimates, inspections, or pictures of the damages themselves, along with how much that would be to get corrected back to the state in which it was originally, or the state in which it would be fixed. But it is something to keep in mind. We are in hurricane season still technically, so it's best to just be aware of these things before they happen so that you're not having to scramble to determine what can be done or what needs to be done in order to further assist our taxpayers in making sure that everything is the way that it's supposed to be. So just keep that in mind. You'll hear this referred to a lot as a tax freeze or a tax ceiling, but essentially what a tax ceiling is a limitation on your taxes. So for the taxes collected for your school district, your ISD, your taxes, when you turn over the age of 65 and have that over over 65 and homestead property exemptions on your account, your school taxes are limited to how much they can collect on your property's taxes. So for instance, the year you turn 65, you pay $300 for your school's taxes, just for your school's taxes. The following year, the calculations determine that that your taxes went up. So instead of paying $300, your tax bill, just based on the calculations as it normally would be, says you would pay $400. Because you have a tax ceiling on your account, instead of paying based off of the value of your property, you are based off of the first year in which you had that exemption. So instead of paying the $400, you would pay the $300. So just keep that in mind. It is something that goes onto your account automatically whenever you have that over 65 exemption in homestead. You don't have to request for it, but it is something that you might look at your bill and not recognize what the calculation is stating would be due as what it is due. So if you see your bill and you see that your school is less than you would have calculated it to be based off of the math on that page, don't worry, it's most likely due to a tax ceiling. A tax deferral, Ms. Mabel spoke on it a bit earlier, but a tax deferral is a postponement of your taxes. A lot of folks get this confused with the over 65 exemption. They are different. The over 65 exemption is just a reduction to your taxes. A tax deferral is a postponement of taxes, meaning these taxes are still due. You are still required to pay them. However, when you have a tax deferral applied to your account, you have an indeterminate time in which to pay your property taxes without suffering those possible foreclosure actions that you would have if you were not under a tax deferral. It is referred to quite often as an insurance for your property, and what we mean by that is it's not always necessary. You may not always use it. You might be the type of person who would prefer to pay their taxes timely each and every year, and we completely understand, respect, and admire that. But if there were a situation in which you were not able to pay your property taxes timely, what a tax deferral does is it reduces how much penalty you pay onto the account, or rather, you don't pay a penalty on tax deferred accounts. You pay an interest on the property tax deferrals, but it's only of 5% per year, as opposed to our usual penalty and interest fees, which can get quite high quite quickly. Deferrals will end upon the change of ownership of the property, meaning if the homeowner passes away, if the homeowner is no longer living there and decides to downsize to go into a smaller property, if they decide to transfer it over into the ownership of someone else, that tax deferral comes off. And all the taxes that were deferred, not exempt, because as I mentioned before, exempt means that it's reduced from your property taxes, but all the taxes that are deferred would be due based on the amount that they are in with that 5% per interest per year for 181 days. After the 181 days from the day that the deferral is removed from your account, we begin to collect based off of the penalty and interest that would have been accrued normally. So just keep that in mind if you are planning on transferring the property into someone else's name and into an heir's name upon your passing, and you have a tax deferral. Just make sure that they are aware, if there is an amount due on that tax deferred account, that they would need to go in and make that payment as soon as possible in order to pay as little as possible and be able to take advantage of that deferral still. It's not a cancellation of taxes, as I mentioned before. It is a postponement, and it allows for that additional time and that possibility of, oh my goodness, I forgot, I'm out of town, or, God forbid, you're in a hospital, or you're just unable to pay that full balance off immediately upon receiving that bill, and by the end of January, you realize you're not going to be able to pay that full amount. This reduces how much you pay in interest, and it gives you additional time with that peace of mind in order to make those payments. In order to have a tax deferral on your account, you must have this be your homestead, along with it being a an over 65 exemption, a disabled homeowner exemption, or a disabled veterans exemption. So you do have to have the homestead in one of those exemptions in order for this to be applicable. And again, this is something that you would apply with through the appraisal district. Just keep in mind, if you do decide that this is the direction you would like to go in and you would like to have this deferral put onto your account, that you speak to your mortgage company if you're still making payments to this property, because some mortgage companies will not allow you to have your taxes deferred while they have an interest or an investment in that property. So make sure you discuss it if you're still making those payments. But if it is something that you would be interested in, please feel free to reach out to the appraisal district and they'll be able to assist you in getting that started for you. So in addition to all of the methods that we've listed before, we do offer payment agreements for folks who need additional time to pay their taxes. If they're unable to pay their taxes in full by the end of January, we do offer payment agreements for property owners, and this is for homestead and non. But if utilized the correct way and if utilized timely, these payment agreements can help you avoid collection efforts, foreclosure actions, and they're not always going to need to be paid off exactly as they are. You can sometimes pay off more and finish it off earlier, and that is an option. You're not required to keep up for the full 12, 24, 36-month payment agreement. It's if you're paying it off sooner, you're able to do that. If you add those payment agreements onto your account prior to the attorneys adding their collection fees to it, then you do not we do not collect those collection fees on the account, so long as it begins prior to collections being added onto the account in the first place. So as I mentioned before, this is for homestead and non-homesteaded properties, but if you are applicable for homestead, but you're not applicable for the over 65 disabled or disabled veterans exemptions, this might be a good tool to help you in making sure that you're able to make those payments, even if not timely, then timely by your payment agreement, and help avoid those actions, that foreclosure action. For the homesteaded property exemption, we offer 12, 24, 36-month payment agreements. And essentially the way that it's collected on, you still pay penalty and interest fees. However, the penalty is frozen at the month in which you create your payment agreement, and the interest increases by 1% per month. So you end up paying a bit less if you're in a homestead agreement, as opposed to if you were just paying however much you could whenever you can without any agreements. Also, keep in mind that the only way that you're able to avoid those collection fees and foreclosure actions is if you are under that payment agreement prior to those collection fees being added. So keep that in mind. This can be used for prior and current year taxes. And with all payment agreements, your payment is due at the end of the month. For properties that are not homesteads, this could be non-residences. So if you have rental properties, this could be for business or commercial accounts. This could be for personal property. And then this could be for like land. Anything that is not a homestead can be put on this type of payment agreement. It is a 12-month payment plan. We do not offer any additional extended times for those. And you do pay penalty and interest fees as you normally would. However, being on this payment agreement and keeping up with these payments would allow you to proceed on without paying those collection fees if you create that agreement timely, and avoid that additional collection of foreclosure actions on your properties. So as before, it is all the payments are due at the end of each month, and it is a every month payment. So it's best to ensure that you're keeping up with your payments, that you're making that monthly payment before the end of each month. And so long as you're able to do so and make those payments timely, then your tax years included in that payment agreement will be paid off by the end of that payment agreement term. For over 65 disabled persons and disabled veterans exemptions on their homestead, we offer something called a quarterly payment plan. And quarterly payment plans are used for folks who are aware that they might be on a fixed income, or they are aware that they're not going to be able to pay off the entirety of their tax bill in one big payment at the end of January, what we do is we allow you to request for a quarterly payment plan. And when you're put on a quarterly payment plan with us here at the Harris County Tax Office, we split your total amount due for the year's taxes into 4 equal payments. And those 4 equal payments would be due at the end of January, at the end of March, the end of May, and at the end of July. And when you're making those payments timely, you do not accrue any penalty or interest fees. And it is a really great way of assisting our over 65 disabled and disabled veterans homeowners in making their payments and being able to make these payments timely in order to kind of extend the way that they are able to make those payments. So you do have to contact our office in order to have this account or your account applied as a quarterly payment plan, but it is a really great help. There's no additional fees for it, and it is a really great boon for those who are not able to make that full payment at the end of January. We have multiple payment options, so you are able to pay online on any of our branch offices, by phone, or by mailing in your check to us through the post office mail or certified mail. Whenever you're making your payments online, you have a couple of different options for payment. You can pay either with a credit card, a debit card, or something called an e-check. And an electronic check is a method in which you're able to input your banking information. And currently they are free. We do not have a fee for collecting e-check payments. However, here in the near future for the 2025 tax year, they'll be 50 cents. So at this time they're free, but that's to follow a bit further into the future. There is a fee for using a credit card or a debit card, and that is a 2.45% fee. So keep that in mind whenever you're making your payment. Alternatively, if you'd prefer to send in a check in the mail or bring a check in person to one of our branch offices, you're more than welcome to do so. And there's no fee for using those. In addition, if you decide that you prefer to pay your property taxes in cash, you can do so at any of our branch offices as well. We are here to help. I've put our contact information here at the end, so if you'd like to write it down and keep that for your notations. We do recommend that you check for your statements. They usually start to come out towards mid-November, so keep an eye on your mail. Make sure that you're getting all of your letters. But if all else fails, you are more than welcome to check online on our website, and our website does have your property tax bill within days after it being completed. So if you have any questions, feel free to ask. I'm going to check through the chat to make sure I haven't missed anything, but I believe I am turning this over to Diana, if I'm correct on that. But as I mentioned before, I'm happy to help. See if I can find any questions.
We don't have any comment in social media.
Wonderful. And then I'm looking through to see if any of these are applicable to the tax office specifically. But if anyone has a question and you'd like to raise your hand or post it into the chat, now would be a good time. I don't see any questions for the tax office in the chat, Diana. Do you see any that I might be missing?
No, I don't see any. I just check it. Nope.
Okay. Let's see.
I think you went through the questions that Nia sent you, right?
Most of those questions were not for me. Let me see what they were again. Bear with me. One of the questions that was posted to Nia was, is there any way to appeal a decision regarding 2 years prior homestead exemption denials? So if one applies for a homestead exemption for 2 years prior, meaning that they lived in the property, somehow it slipped their mind to apply for their exemptions or they missed the deadline, is there any way to appeal a decision about not allowing them to have that exemption, Mabel?
So if they apply and they are qualified, the law does allow HCAD to go back the current year plus 2 years. So if they do apply and they're approved, they will get those 2 years. They will get credit for those 2 years.
So if they are unable to,
At this time, at this time, we can go back as far as 2023.
okay. A second question that we received from Nia is, I need to know about part-time residents between Texas and another state for homestead exemptions in Texas only. So my understanding, it might have been in the chat as well, that they have 2 homes and they use, or only Texas uses a homestead exemption, so they don't have exemptions in the other state in which they're living. So I believe Alicia went over it pretty thoroughly.
Okay.
Yeah, she did tell us that the Texas driver's license, and you must be a Texas resident to qualify. As long as you own and occupy the property as your primary residence and maintain a Texas driver's license as a Texas resident and claim no other exemptions in or out of the state, then you may be eligible for the homestead exemption and to apply with the appraisal district. Let's see. There's a question about homeowners insurance policies, but I'm not entirely sure if anyone here could answer that question. And then there was how to file a response when property taxes are delinquent, and then how can I set up payment options. So that would be a question for me. So whenever you receive a statement stating that your taxes are delinquent and you recognize I haven't paid them, I forgot them, I wasn't aware that I had a property tax payment that I needed to pay, best option is to contact our office here. Any of the contact information that I provided earlier would work. Our phone number is 713-274-8000. And speaking to any of the representatives here at our property tax line, they'd be able to assist you in either creating a property payment agreement or in telling you the amount in which you would be required to pay. Once those property taxes are delinquent, depending on how long it's been since they became delinquent and the value itself, they can sometimes be added on to collections fees through our attorneys, meaning that our office turns over the taxes to our attorneys' offices and then they begin the collection of taxes. So those include additional fees such as collection fees, court fees, and it is something that you would want to contact us depending on your situation. So good question. Please feel free to contact us. There's a question now in the chat for vacant property and can you pay in installments? So yes, you are able to get an installment payment agreement on vacant property. So like land, if you own the property and it's just a home sitting on land and no one lives there, but it is in your name, you are able to get an installment agreement on that. You would pay full penalty and interest, but depending on when those fees or when we turn those accounts over to the attorneys will depend on if you save anything on collection fees. But yes, you are able to contact our office to request for an installment payment agreement on those properties as well. I'm not seeing any other questions. Diana, are you getting anything from any of the other methods?
No, I don't have any comment or social media.
All right. Well, perfect. I'll turn it over to you then if you'd like to sign us out or give closing statements, Diana.
Yep. Just to tell the people, thank you so much for joining us today, and we will send you the calendar, the September calendar, next week. Ms. Mabel, would you like to say something?
Other than I'd just like to thank my colleague Alicia Kellum for filling in the chat room with her and rapidly answering a lot of the questions, and everyone else for joining us today.
Thank you so much. Thank you, Mabel.
All right.
Thank you.
All right, thank you, ladies. I hope you have a good rest of your day. Thank you, everyone, for joining. You know, as usual, feel free to send your questions over to Ms. Nia if you have any. But we'll be back next month.
Thank you.
Have a great day, everyone.
Bye.